Hey guys, how's everybody doing? Market's going to open in 5 minutes or so. I decided to do a new kind of show, and I don't have any slides. So if you guys like organized stuff, you probably won't like this. Um, but I want to look at the market. I want to look at the technical analysis of the market. Let's look at it's something I usually don't talk much about, but let's look at moving averages and that kind of stuff. Volume, price by volume, and all that kind of stuff. Let's see what's going to happen. Now, I'm just going to say this right off the bat because it opened on Dell. I made a bearish earnings trade on Dell, and Dell is down this morning, so that would be welcome. But let's see how other computer companies are doing. We were talking about AMD and Discord just now. My gosh, AMD's actually up, but it's only up 5 cents. Man, would you look at that? Okay, let's check out NVIDIA. I dumped it NVDY for my model portfolio a couple of days ago, and boy, am I glad. I dumped it on this day, and then that next day it went up, but it was a total dead cat bounce. All I'm going to say today is let's look at this. Let's look at the SPY. Okay, these two red lines right here. This election night gap was so big, I didn't use anyway. I just have two red lines. That's the top of the gap. That's the bottom of the gap. The SPY has yet to repair that gap. By repair, it means test it and see if there's buyers still there. That's around the 580 area. Now, there's nothing saying it's going to necessarily go there. It could turn around and start going up. Who knows? But I'm looking at the 580 area on the SPY, and then if we lose that, I'm looking lower. Now, let's look at the Qs. It's also important to keep an eye on the 200-day moving average. Well, on my Bollinger Bands, I use the 200-period moving average for the Bollinger Bands and the 1.6 standard deviation. Those are the two best settings. I got that from a hedge fund guy. But in any event, same thing with the Qs. The Qs, the 200-day moving average is right here about 490, and their election night gap is still slightly open. Like I say, there's no guarantee we're going to get there, but it's what I'm looking at from a technical perspective. It's what I'm looking at. If we were to get underneath that, there's not a lot of support, not a lot of apparent support underneath. I would look for 480 next, and then I would look for much lower next after that. So hopefully that doesn't happen. I always say nothing good happens under the 200-day moving average. It's just nothing good happens look at this, as long as you're on top of the 200-day moving average. So that would mean in the upper part of the Bollinger Bands, you're good. Look, we got in the upper part of the Bollinger Bands March of 2023, and we never looked back. And we've touched it a couple of times, but when we did, it was the dip buy of a lifetime. I mean, look, how would you like to get this one in August? That was a great dip buy. You could have bought the August dip at 424 in the market, even after pulling back, is sitting at 500 right now. Even if you were late and got the August dip 10 points late because you missed it by a day, or 20 points late, 434, 444, and the market's at 500 now, it's at 10% face ripper. So the 200-period moving average is something important to keep our eye on, and so is this gap. But anyway, I would imagine these are in play. So for today, what I'm thinking might happen, we're going to get into the shorter time frame. What I am thinking might happen today, well, what I'm looking for is I'm looking for a rally back up into the 510, 550. So I'm looking for a rally back up into here, and then I'm looking to see if it falters. And if it does falter, I'll play options for next week, probably next Tuesday or Wednesday at the 492 level. I'll do some kind of strategy that targets that level. Now, if we get up there and we don't falter and we get on the other side and we start blowing up, I don't expect that to happen, but I mean, that could happen. But I'm expecting us to falter. Look what happened yesterday when we rallied. When we rallied back to the lower line, when you're in a trend on the 30-minute and you rally back to the lower line of the Bollinger Bands, that's lots of times a good place to re-enter in the direction of the trend. And yesterday, that was definitely true. So today, if we rallied back to that bottom line, it would also coincide with this area where there's been sellers, where there were sellers yesterday. There was buyers before, but now that the sellers have turned that into bear property. But I'm just looking at this on the Qs. I'm definitely looking at this 490 area. Like I said, I don't think we'll go straight there. Let's see, is the market open also? But here's the other thing. We have numbers coming out today. Oh, gosh. We have what is it? We have like several numbers coming out today. Here they are. I mean, no, not that one. Futures maybe higher. We have like three different numbers today. We have one at 9:45. We have one at 10 in another one. In any event, so unless one of those markets, unless one of those numbers moves the market. So it looks like futures are open. Now let's look at SPX. Futures don't open as fast as cash for some reason on TradingView. All right. All right. Well, let's look at some other stuff. Let's look at Amazon. Let's look at some other big tech stocks and see what's going on. Now, Amazon actually set a new high yesterday. I mean, that's, it's a moral victory, but that's better than most of the other stuff did. Apple's been holding up until yesterday. Had been holding up better than the other stocks, but Apple, I'd say Apple might be a dip buy around the 228 area. Let's look at old ARK. Boy, that is ugly. What happened to ARK? Jiminy criminy. Are you serious, ARK? Look at ARK. We're only 3 minutes into the day, but that's not a bullish sign when you gap to a new low on the chart. All right, well, let's look at Tesla's. Same thing with Tesla, just opened, gap to a new low. Once Tesla got into a downtrend, this bottom Bollinger Band, it was money a couple of times. It didn't work there, but some people will sell a retracement to the middle Bollinger Band also. A lot of people will. When you get in a really good trend like yesterday, you won't get that far. The bulls won't have enough power to get it. If you're waiting for that kind of rally to sell, it's been my experience, lots of times you won't get it. So I use the bottom line to re-enter in the direction of the trend lots of times. At the same token, I showed you guys the daily chart. The daily chart has a 200-period moving average right in the middle of the Bollinger Bands. So it's real easy to look and see if we're on the bullish side of the 200-day or the bearish side. On Tesla, and this is on the 30-minute chart. On the 30-minute chart, they're under the 200-day moving average, of course. It's a bearish trend in that time frame. I usually look at stuff in the 30-minute time frame, but also in the daily time frame to look back. And in the daily time frame, well, it looks like we had a blow off top here. I mean, this has all the hallmarks of a blow off top. But in any event, we have some open gaps down here, which is right about where we came back to, which they're probably trying to see if there's still buyers there. So this could be a good spot to get in on Tesla. And also, Tesla's right on the 200-day moving average. If it gets under that, in my opinion, that's my definition of a bear market, is under the 200-day moving average. That's not what other people say, but you can see Tesla spent a lot of time under the 200-day moving average in January of 2024. And when they moved under, they were at 225, and they ended up dropping to 137 before they rallied and then got back on top of the 200-day moving average. And that was only due to, when was that? That was July 2nd. I forget what the news was on that. Maybe it had to do with this earnings, or it was some number or something that was going to come out. I forget. But in any event, when they stay on top of the 200 moving average, well, then they develop a bullish trend. And God forbid if you get on top of the upper Bollinger Band, that's a serious bullish trend. You can see how much strength that has, because this market, I mean, it's based on a 200 period moving average. So that's a long moving average to be on top of the Bollinger Band. That was a huge freaking, that's the definition of a blow off top, in my opinion, or a potential. That's what it looks like. All the volumes down here is a quick excursion up here. Look, when you did get up here, like the 419, 450 level, there were sellers coming out of the woodwork. Yeah, there's people that are dip buyers at 251 and some in here, but up at the higher levels, it was solid sellers. All right, so that's Tesla. Let's look at MicroStrategies. This one is, well, that's Misty. Let's look at MSTR. I mean, it looks very similar to, or looks similar in some ways to Tesla. You can see these over here on the left of the chart. This is price by volume, and you can see where it makes a protrusion or whatever is that's called a high volume node, HVN, and where it goes, right here is a low volume node, and you can see right there, if you go across on the chart, there was a gap and it went right through that area pretty fast. There wasn't a lot of trading there. So if we would have gone back to there, the first time we would have gone back to there, I would have expected buyers to still be there. We did retrace back to here. Well, actually, we did retrace back to there, in that low volume node right there, and that was a good spot to buy. All right, so that's MicroStrategies. But this one, just looking at this, I mean, MicroStrategies at least is still on top of the 200-day moving average. So how about oil? What's oil been doing lately? Look at that. Now, oil trades more like a commodity. That's, this is your typical bell curve distribution. That's what you're looking at over here on the right side. It's one way to think of it. Think of it as the distribution of outcomes, or you think of it as a bell curve. And that's the shape that it's kind of supposed to take, is more like a bell curve. But then as the shapes look different than bell curves, and as time passes, there's traders can discern. You can look inside the market by seeing the different price at the volume levels. But anyway, USO. Now, USO is not really in a trend. Look, this is the 200-day moving average. We went on top of it back in February of 2024, stayed on top of it until June of 2024 when the market started acting crazy, got back under the 200-day, then we're back above it, back below. So this market right here is, at least in this time frame, trendless, or not really trending. But let's do this. Let's put it in the 30-minute time frame. All right, so in the 30-minute time frame, so it sold off down here. Then yesterday we rallied up here, but you could see there was a high volume node, and there was sellers. That that was a good place to enter back in the direction of the trend, which was short. And sure enough, this morning we're back down. However, we're right back here in the middle of this low volume node. So we'll see what happens. This chart's, I don't really follow oil that much, but maybe some of you guys do. I don't know. Let's look at GDX, because I just bought GDXY the other day. Jiminy crummy, would you look at that? I sold NVDY and I bought GDXY because I wanted less risk. I wanted some inflation protection and that kind of stuff. And I think the market's no good through here. I mean, maybe the market will be good here in a month or two, but just right now the market hasn't been good. So anyway, but yeah, it looks like I can't hide. I was also thinking about getting USO, and I haven't pulled the trigger on that, but that one's down today also. So I do think in general, GDXY and USOY will be more stable than NVDY. But the other side of that is, if the market starts going up and taking off again, they're going to be more stable, but that means I won't have as much upside. In any event, I don't know. I'll look at that once a quarter. I'm going to let it go a quarter. I don't think this is going to be a great quarter for the market. Let it go a quarter, March, April, May. and then I'll come on and probably reallocate for the summer. You know, lots of times in the summer, they say sell in May and go away and all that kind of stuff, but we'll do a different allocation for the summer. Hey, what's up, Brandon G? I appreciate you being here. I appreciate you for leaving the nice comment. I really do. Yeah, I did publicize this show, but I'm thinking about just doing it every morning because I like to talk about charts and stuff. So, but anyway, while I got you on here, if anyone's still on here, let's look at, let's just go look at this darn Altiverse and whatever else we have to look at and see what's going on that. So let's see what sheets. There it is. I call it the GPTY verse now because I'm whatever. All right. I also bought GPTY. I traded in triple QI for GPTY. Same theory. Triple QI is great, but I just don't think it's a great time for the. It's not. I don't think it's going to be a great quarter for tech stocks. So, you know, I traded that one in as well. And the reason I like GPTY is because it has a put hedge and the other ones don't have that. So it should be a little bit more volatile, especially if we're expecting kind of a down market. Okay, well, this chart isn't really much fun to look at yet because it's really not moving enough. It's 8:42. Well, it hadn't even started updating yet because it starts updating at 8:20. So, I mean, it starts updating 20 minutes late. So anyway, this is a bad idea to show you guys this. Let's just go back and look at the market, then I'm going to let you guys go. I just want to see the SPY bounce. You can look here at the SPY. There was no buyer yesterday for the SPY. Not even up here at this other balance. These areas where you have a high volume note, some people also call them a balance area because it's where the market is trading in balance. Where the market, is trading, goes up too high, then comes down. Where it's a mean reverting market. When you have a mean reverting market, it builds out the volume at whatever price that is. But you can kind of see with this, you can see with volume profile, you can see in the numbers, you could see that in the SPY, there wasn't a lot of buyers. Look at the Qs though. The Qs actually did have a lot of interest down here at the 514 level, tons of buyers, but then they lost that level, and they free fell last night. But then this morning at the lows, there's been buyers. But I sit here and watch this all day. But you have to, like I say, you have to look at that and put that in your head, and then at the same time be able to look at the daily and try to put the pictures together. So on the daily, I'm playing maybe for, I think we'll either go here or we'll go here. I think we'll either go repair this gap, or if we rally first, maybe we'll go to this gap, this 510 area first. So on the daily, if we rally, I'm looking for maybe for new shorts around 507, 513 or something. Then I come down here to the 30-minute and try to put it together. Well, in this case, it's the same trade, though. I'd be looking for the same thing. But I would be a little bit worried about this. I'll tell you this. I would be more likely to buy the Qs than the SPY. So if we do rally and we get up into here, what I might do is do a pairs trade. I might buy puts on the SPY. I might buy calls on the Q. And why is Qs? And why is that? Because there was hella buyers here yesterday. Hella buyers. I thought the Qs were going to save the market. I mean, I thought they were. Let's look at the SPY, and I'll show you the difference in the price action. The SPY did not have a lot of interest. I mean, I guess they had a little interest yesterday, but the SPY has been more bearish. Now let's look at Russell, IWM, Russell 2000. Okay, Russell 2000 actually gapped down this morning, but sometimes that's a bullish sign. But the Russell 2000 looks similar. There hasn't been people interested at this level. There was people interested at 225 back when it was chopping around 225, but when they lost that level and flew right through this low volume node, now they're building out a new balance area or trying to. So we'll see. I look at all this stuff one day at a time and 30 minutes at a time. Because I look at the 30-minute bars and then I look at the daily bars. And I just, take it one day at a time. Back in August, it's the same thing. We aren't going to look at August. I should do some content about August, but It's the same thing whenever the market was going down. I told everyone a week or two before, I said, hey, you need to get puts. But then I didn't tell everyone to get out at the right time, because at the bottom, I still thought it was going to go lower, kind of like now. But I was wrong. But what I'm saying is, but the narrative develops one day at a time. One day we put in a higher low. I go, okay, that's one thing in the bulls territory. Then another day we took back some bearish territory. Okay, that's two. And then, by a week or two later, I'm going, well, I guess the bear market's over. So I don't try to predict. I just develop a narrative and take it on a day by day and an hour by hour basis. My background as an alcoholic has taught me how to take things day by day, and it's something I was never able to do. And when I was still drinking, my trading sucked. Oh my gosh, because I wasn't in the right headspace. But quitting drinking has been the best thing for my trading. And it's not because I was drinking while I was trading. I was just a weekend drinker, but I just wasn't in a good spot. Weekend and nighttime drinker, let's say. But anyway, all right, guys. Well, you can't trade with the hangover. It's no good to trade with the hangover. So it's 8:47, and I think maybe that number came out I was talking about. Maybe I've stalled long enough to hear it. That pre-bell, here it is, upcoming economic data. Here it is. All right. Personal income and outlays report. Well, that'll be released at 8:30. So we've already had that one come out. Then we had, or that was at 7:30 my time, 8:30 your time, had the Chicago PMI that just came out. And that's a big one that could sometimes move the market. And Baker Hughes domestic oil and gas rig count. Then we have a Fed chairman speaking at 10:15. Let's, the one thing I didn't check today was Bitcoin. How can we not check Bitcoin? I mean, nothing else really matters besides Bitcoin. A lot of days, it doesn't seem like anyway. All right. Somebody told me I shouldn't do futures yesterday, so I'll check it sometimes on Coinbase also. Okay, well, look at that. Now that is a nice rally to see out of Bitcoin. That is a nice rally to see. Same thing as the other ones, though. If we get back to this high volume node the first time, or maybe even this middle line, which will be right about where the high volume node is the first time anyway, I'm going to look for it to falter and for sellers to be there. If we take that area back and then turn it into support, we can start talking about other stuff at that time. But we still have a lot more work to do. We have a huge gap area, a huge low volume node we have to get through here. It'd be great to get back up here to the balance area at 96,000. We just got to do some work one day at a time. Once we take back 96,000, we'll try to take back whatever the next area is. We'll get out to find the next area. We'd have to get a longer chart, but it's one day at a time. It's all about a narrative and not trying to predict what the market's going to do, just being aware of what it is doing and trying to allocate the most advantageous trades for whatever the state the market's in right now. Sometimes the market shops all summer or something, and those are great times for iron condors and stuff like that. When the market's moving like this, I think you're safe to buy puts. I recommended getting some puts yesterday. I don't know if any of you guys did, but they turned out pretty well. But I recommended it before when the market rallied and faltered. I recommended it. That's what you're supposed to do. Let it rally, boom, and then it falter, and that's the way you do it. Or that's one way to do it. I'm acting like I know. I don't know. I just know that I'm better now at doing it than when I was drinking. But it's the same thing. It's one day at a time. You can't get overwhelmed by something that's going on. You have to step back and look at the broader picture. Anyway, it's easier said than done. So, but yeah, I gave you guys these two trades, Barry. I mean, they're killing it right now. Let's see if this Dell. I made a bearish Dell play just because I wanted to do an earnings trade, but I didn't like the market. But then Dell went up. So, those are expire or close. I'm sorry. Here's active. Okay, here's the ones I told you guys about. Bearish bet for Friday, $203. Bearish YOLO plus income. I gave out a freaking. This was a great one. It's bearish. Made $227. Took your wife to dinner if you put it on. You could take it off this morning for a big profit. Max loss was only $773. But heck, at this point, when does it expire? It doesn't expire till next Friday. It just needs the price to be under 514 by next Friday. Now, I don't know if it'll still be under 514 by next Friday, but these are decent ways to play a bearish bet. So if you did this yesterday, like I told you to, you could sell it this morning, make money, or keep it and hope the market keeps going down. But you got it credit for it. You brought in nearly 30%, and there's no free money. If the market starts blowing up, this trade will lose $700. So it's not like there's any free money, but you're just thinking the market's not going to blow up if you do this trade. Anyway, if you like these kinds of trades, join my Discord. I'll post the link. We got a good crowd in there. We have a really good crowd of guys in there. I like them a lot. I learn a lot from these guys. Here is paste this plain text. Do you guys like this technical analysis? I really like this kind of stuff. But when I first started my station, I was trying to discourage people from gambling because I thought there was too much gambling. So I say, and I really do believe this, there is no free money. There's no way to make free money. And there's no, there's no one system that works all the time or whatever, because everyone would do it. So I would pretty much emphasize that. And I said, don't try to time the market. And I always did the thing about the old, if you miss the best 10 days of the year, there's all kinds of studies that say you can't time the market. And I always quote those and stuff. But I think I just had a bad attitude. I think you can partially time the market if you use a short enough time frame. I think when I was a drunk, I had a bad attitude and I just thought, oh, this sucks. I used to think it was rigged. It's rigged. The market maker doesn't care about my 3-lot option order. They do not care. Anyway, I appreciate you guys. Hey, Dan, I appreciate you. Dan gave a super chat or whatever it's called. I really appreciate it. Dan, if you have another question you'd like to ask, feel free to ask it. Brandon, what's going on? Your knowledge is very undervalued. Oh, thank you, Brandon. I appreciate you. Okay, I may start doing this every day. I may start doing this technical analysis, do it right when the market opens, or maybe even 8:15. We'll do it because I like to look at setups for the day. Because as you guys know, I really like Q and SPY options. I think they're easier to trade, and Russell, but indexes are so much easier because you have so much less data to deal with that it just anyway, that's my opinion though. But single stocks are great too. No, I wouldn't buy anything today. What would be a good buy today? I'm a momentum guy, so I would, I'm not buying anything today. And it depends. So there's always something to buy. That's kind of a stupid thing to say. There's always something to buy. Let me show you. Here's a trade a person could make if you wanted to. I don't know. I'd recommend it, but here's like the most daring trade of the day. So let's go out. Let's do this. Let me just see what's available. All right. So let's get some Q options out. Let me go show you a trick in option strat. This line right there is the first standard deviation. It's very close to the market maker's expected move. It's close to it. It's close enough where it works for me. So what I do is when I'm looking for the market maker's expected move, if I don't know anything else, I'm not even looking at the chart. I don't know anything else. If I'm bullish, I'm going to target this area. And so what is that? 518 or something. If I'm bearish, I'm going to target this area. If I'm uber bullish, I might target the second standard deviation, or there's even a third standard deviation. The second standard deviation, we only get to about 2.7% of the time, and the third standard deviation, less than 1. But the first standard deviation, we get to more times than not. It's a very good same place to aim for something. So if I wanted to do something today, here's what you could do. Let me just do this really quick. And I'm thinking, if you were bullish, I'm giving a contrarian trade out because, the sell-off could be over. Yesterday's low could have been it. I don't know. It could be over for now. It might rally for a month and then sell off more. You never know. You have to be open to all outcomes. Okay, so here is a decent. All right, hang on a second. Oh, shit, I messed it up. I messed it up. I'm sorry. Well, anyway, okay, let's do that. Let me just show you an easy way to do this. I'm not going to get too technical. Let's just exclude. All right. Let's just buy a call. I mean, if we think the dip's in, we'll go out to next Friday, think the market's going to rally next week, and see where it might rally to. So where it might rally to, is 519. So watch this. We could buy in at the money call. It's $8. It's $800. So that's a lot of money. Well, we could sell the 519, which is where we think it's going. Remember, your max profit is always where the short strike is. So if we have a long strike of 499 and a short strike of 519, where's your max profit at the short strike, 519? So if a person, thought maybe the sell-off was overdone or it was over and that we might bounce next week, I mean, this is one way to do it. Let me give you some other ideas. I'm trying to add a little more leverage to make it more fun. All right, here's a fun way to do it. You're either going to lose $242 if the market doesn't move, but if you can get this darn thing just to go to the first standard deviation, you triple your money, and it's good for next week. No matter how low the market goes, you won't lose any more money because So this would be a decent way if you thought this sell-off's overdone, and I think that it's going to bounce into next week. That's one way to do it. So anyway, we'll just hit save trade, and I'm just going to put a bounce idea for next week. It's important to know what it's for. I just always look at a spot. You have to have a spot on the map that you're targeting, and you have to have a date that you're targeting to buy, and then you have all kinds of options all kinds of strategies that you can do. But anyway, all right, guys. Well, this has been fun. I like this live stream, so it's been real fun. I really appreciate. Hey, good news. I just asked Will Ryan from Granite Shares for an interview. I don't know if he's got back to me, or I haven't checked. I don't think he's got back to me yet, but I'm excited about that. Will is a good guy. He just came out with, he came out TSYY. I say just came out. That was like a month ago, 2 months ago maybe. But now he's come out with something called Y-Spy, and it's index-based, and I cannot wait to talk to him about it. I mean, I cannot wait. So anyway, I would imagine he'll probably be on in the next week or two. But definitely join my Discord. Like I say, I appreciate you guys. So Kelly, yeah, I don't know about that trade, but if you had $250 and you were bullish on the market, and you were prepared to lose it, that trade had only a 40% chance of 30% chance of success or something. So, but you can triple your money if you're right. So just beware. But I love doing trades for people. If you guys, I just don't like picking the direction, because if you guys join my Discord and you guys have a bearish outlook on something, hit me up and I'll give you what, in my opinion, is the best math play, the best bearish play. That's kind of what I like to do. All right, guys. Well, I really appreciate each and every one of you. Jackson, why don't you say hi? Come here, Jackson. Let's see if Jackson can make an appearance. Jackson. Oh, come here, Jackson. Jackson, come here. All right, he's being Jackson, come here. He woke up on the wrong side of the bed this morning. He may need to go potty. I'm going to take him out. All right, guys. I appreciate each and every one of you guys. Have a good day. And Dan, thanks for the super chat. Appreciate you. Hit me up in Discord.